What's going on, guys? Welcome to Own the Chaos. My name is Brad Smith, and I trade over-the-counter stocks, and I find a lot of success in doing this, and so I've created a community that's called WeTradeHQ.com, where we all get together and communicate and get with like-minded individuals where we can learn and grow and develop and win together. So welcome to the show today, and we are talking about filings. What the heck is a 10K? What the heck is a 10Q? And why are they important? Why do they matter to you? And we'll touch on a little bit of a side piece there on the annual report and quarterly report. Are they the same thing? And what's the difference? And so I will go over that with you. If you're joining me for the first time, welcome. I do encourage you to ask any questions over here in the chat box where everybody else is tuning in right now. And if you have any questions pertaining to today's topic, or maybe just in trading in general, or maybe about the community that we have, I'd be happy to answer those questions towards the end of the video. So without further ado, let me welcome some folks in here. And we got Damien and Alan. So Damien was first time here. Yeah, right. Well, good to have you guys here. We'll, I guess, kind of chill out and wait for some other folks to tune in. Julie, what's going on? So actually, I'll touch on this now. So in my mentorship group, if you're in there, I go live with folks from 9 a.m. to 10 a.m. Eastern time, most volatile time in the market. Basically, you can bump some ideas off of me. We go over scan tools and what's popping up on our scanners at that point in time. There are times where if I see value in a stock, I'll be making live trades during that time period as well, so you can kind of see my thought process. If you're interested in that, the link's down in the description below. I encourage you to check that out. But in the mentorship for the last couple of days, we've been talking about how I sit in this chair for most of my day. And I have been getting fat, and I know that I don't look it, but I'm telling you, the beer and all the fast food has gone into one central location right here in my gut. And I used to have, some abs, and it's just kind of turned into a little squishiness down here. So I have noticed that I've been getting out of shape, and I have noticed that I'm gaining some weight. I'm actually the heaviest I've ever been in my entire life. And so I want us to do this together. I need some help from you. So I need to be in some sort of accountability partner. So if you guys are interested in that, let's brainstorm and put our heads together. Maybe we should do a planking challenge or a push-up challenge, and we can share it with each other on Facebook or one of our social media outlets. I don't care. Let's just come up with something, because I'm out of shape. I'm tired of sitting in this chair and basically, destroying my physique. My girlish figure is no longer there. So let's put our heads together and try to figure out, maybe we can come up with some sort of contest or just challenge ourselves to not necessarily just even lose weight, but just to get healthier and and more in shape and more active, because I know sitting in this chair all day is not doing me any favors. So I need this as much as I'm sure a lot of you need this as well, especially if you're sitting in a chair like I am all day, just trading along or doing whatever it is that we're doing. I'm doing business stuff, of course, and just talking on the phone all the time, and I should be out at least getting active and moving around. So all ears on that one. And so now I think we probably got enough people in here to get on with today's topic. So what's going on, Moise, Jordan, what's going on? Well, you got one big ab also. Yeah, I got one big ab going on. So let's do that. I'd be happy to engage in something like that. What's going on, Israel? Glad to have you here, buddy. Yeah, so sitting all day is just the most terrible thing for you. And I know that about myself. It's just, before I know it, I'm working like crazy. Before I know it, the bell's rung, and holy crap, my whole entire day is gone. And then I'm getting ready to go live with you guys. So I want to be able to do that, and have you guys hold me accountable to that as well. So let's do it. We'll think of something, and maybe we can just have some sort of leaderboard, whether it's on our Facebook group. I think that would be a great thing to do. Sorry, I know you're seeing a million of me. I'm trying to get to the topic at hand today. So this is an example of a stock that has not a 10K or a 10Q, but they have quarterly reports and annual reports. Okay, just wanted you to know the difference. If you're joining me for the first time, if you're not familiar with this resource or this website, it's OTC Markets. OTCmarkets.com is the resource that you would use whenever you're looking up due diligence on a ticker. They have all of their security details, disclosures, news, all the information that's been made public on a particular stock. OTC in particular is available here at otcmarkets.com for you to do your fundamental analysis on whatever it is that you're trying to find value in. So, annual reports and quarterly reports. Here is another example. Now, this is HIPH. Here's another example of what a 10K and 10Q would look like if you're looking at it at OTC Markets. So if you're going down here and you see 10K, that's going to be your annual report. This is equivalent to what the annual report is on HIPH. This 10Q is the equivalent to a quarterly report on what was on HIPH. Now, there is differences here. So when you're looking at this one, so here's the annual report for HIPH. And here is that's the 10Q. Here's the 10K for FRFS. So as you can already see, when you're looking at the very top of it, the 10K looks very much more structured, I guess. Not necessarily structured, more technical, I think is the term that I used this morning when I was talking to my folks about it. It's very... It looks like the English language to somebody who maybe has their CPA or something like that. It's very, I guess, dry and very methodical. Whereas like your annual report kind of goes in a little bit more, it's a little more wordy, I think, and it's a little bit easier to read, in my opinion. It's got basically what's called, their version of a table of contents. It kind of gives a little bit more of a snapshot and a clearer picture of like what the company does. See, here is the balance sheet for HIPH on annual report, and if you look at the balance sheet here, you got to scroll down a little ways after all of this bull crap that you have to do with the SEC, until you finally get to maybe a balance sheet later on down the line here. Here it is. So here's a difference between a balance sheet looks like on a 10K versus an annual report. See how it's just, I think, in my opinion, and you can tell me if I'm wrong, but I think looking at an annual report just makes it a lot easier to read. The unfortunate thing is that it's all depending on the company itself. It all depends on the discretion of the company, whether they want to do an annual report, and it might also depend on who the accountants are that they have doing these sorts of things. I personally prefer looking through an annual report because I just think it's easier to read, it's easier to follow. It has much more of a flow, and I think maybe that was the word I wanted to look for. It has much more of a flow to it than like a 10K does. But they're essentially the same thing. Okay, they do both. They do both of the same, or serve the same purpose. It's just that one's easier to read than the other, I think, in my opinion. And the unfortunate thing is that I wish that they were this way across the board. Unfortunately, they're not. But when you're looking at something like this, there's a few things that you want to pay attention to. In particular, if you're looking at a balance sheet for either company. If you're looking at here, so let's say we look at the balance sheet for HIPH. Here it is, annual report. So a balance sheet's broken down like this. If you're into accounting, if you like accounting, this will be your thing. So here's the balance sheet. Look at the balance sheet. You'll see current assets always equal current liabilities and stockholders' equity. So if you're looking at this, this is basically what the company has. It's current assets. Okay, $275,070, and it's going to equal this down here as well. So total liabilities and stockholders' equity is going to equal the total assets. Always, 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 always. The things you want to pay attention to when you're looking at this, in particular, I always like to look at the convertible notes. What kind of debt do they have that they can throw at us as the investor? So right now, as of December 2017, this is the annual report. Obviously, we're looking at 364,000 of convertible debt notes. Okay, due to third parties. If you look at the quarterly report, it's set up in a very similar fashion. This is just released on a quarterly basis. So the most recently quarterly report came out March 31st. So it looks like they follow the calendar year. They don't have a different fiscal year, and so you're scrolling down, basically looking at the same thing. So it doesn't look like any of their convertible notes have been paid off yet. Looks to be about the same as it was back in December of last year. So they haven't done much about the debt. Okay, so it's still there. Positive thing is, I guess, for the investor is that they haven't diluted anything yet. So they haven't converted any of this. Now, if you go look at the chart, it looks as though they might be doing some of that now. Maybe they're looking to pay this debt off. Who knows? But that's a different conversation for a different day. All the purpose of this video today is just to get you to understand and maybe learn how to read a form like this, whether it's in a form of an annual report or a quarterly report or a 10K or a 10Q. A 10Q is going to be the same thing. So you're looking at 10Q. It's very similar to GIFA or FRFS's 10K. And you're looking down here at their balance sheet. So same thing, okay? It's just got these funny little lines, and maybe makes it a little bit more difficult to read. But if you're looking at total assets, 48,829, come down here, make sure that these equal. They very well should if this company is paying an accountant to do this the right way. But you can look and see accounts payable and the liabilities. So the accounts payable is obviously what they're owing, what they're trying to pay off to maybe purchases that they've made. Accrued salary, obviously that's pretty self-explanatory. Doesn't appear that they have too much as far as convertible debt is concerned. Let's see here. Yeah, doesn't look like they have much as far as, convertible debt. Anything that's going to harm the investor, not seeing much in the form of that. So looks like we're pretty good there. If I was looking at this and I wanted to invest in it, at least I would know that they're not, diluting the crap out of it like we see a lot of times. Same thing when you're going to 10Q, you're going to go to the same thing. 10Q is going to be much shorter because it's only giving you the snapshot of a quarterly report and not on an annual basis. The annual report's on an accumulative scale, whereas a quarterly is just giving you a snapshot of those 3 months. And same thing, you're looking through here to see if there's something in here that's going to harm you as the investor. Are they going to be dumping shares anytime soon right in your lap so that, it basically kills the price per share that maybe you got in at, or maybe that you're looking to move forward in. FRFS has done a lot of people some pretty good here, and even since last fall when a lot of folks got into this. I think there's some pretty good things coming for them. But again, this is just something to kind of give you a example of how different that those two things are between a 10K, a 10Q, what's an annual report, what's a quarterly report, are they the same thing? So the answer is that yes, essentially they are the same thing. It's just one's a little bit easier to read than the other, and that's a simplified version. Obviously, there's much more technical and legal reasons why they do all that stuff, but for what you need to know and understand, they're essentially the same thing. And all you really need to look for as the investor, for the most part. Now, they will have news in there, they will sneak news in there, like maybe acquisitions or mergers or something like that in a 10Q or 10K. But the first thing that I'm looking at when a filing gets released like that, I'm going straight to the balance sheet, and then I'll maybe go towards something else. Maybe there's some news that came out or whatever that's released within that 10Q or 10K or annual report or quarterly report that I might look for after I visit the balance sheet and see what's going on. And that's really what I go towards when I'm looking at due diligence to making a purchase decision on a brand new stock. Say I'm looking to buy into something that I haven't bought into before. I'm going to go to those filings to check to see, okay, what are we going on? What do we have to work with here? Are they looking to convert a bunch of debt by dumping shares onto me as the investor? That's going to basically make it very hard for it to move. Or are they in good standing? Do they have a bunch of revenue coming in? And you'll be able to find all of that on that balance sheet right there on the quarterly or 10K or annual report, whatever you want to call it. They all mean the same thing. You can go and look at any of the bigger board stocks. They all have the same thing going on. So like Netflix, for example, they actually do annual and quarterly reports. They don't do 10Ks or 10Qs. So I don't know the exact legal reason. I know that there are, but really that's not important. The important thing is what is the company doing? And are they in mounds of debt? Basically the stuff that you want to look for. So just looking here to see if anybody's chiming in. Look up Rob Riches for abdominal workouts. All right. I'll check that out. Late but here. Welcome, Gabe. How does dilution affect our investment in a company as shareholders? So good question, Luis. So when a company goes into a net, say they have a note outstanding with a lender, and the lender basically makes all of their money back by dumping the shares back into the company itself. So they're going to sell that off so that you can buy them. But that increases the share structure of the company, for one. How that's bad for you is that it makes it harder for the price per share to move at that point. They're just trying to unload all these shares. Company takes a loan out to a note holder for $500,000, and then basically all the note holder does is dump those shares back onto you. So it makes it much harder for the stock to move, for one. Is it always bad? No, it's not always bad. You can certainly make money doing it. It's very hard to do it long term and be patient with it, in my opinion and my experience. But dilution overall is toxic debt, in my opinion, and all they're doing is just basically just dumping those shares back onto you so that you can buy up their debt. It's essentially what you're doing. You're buying the debt of the company so that they can do whatever it is they got to do. Maybe they got to pay salaries, or maybe they got to go on, some lavish vacation at your expense. No, I mean, and that's not out of the realm of possibility. Unfortunately, I've seen it happen, but dilution is I will say rarely a good thing. Some dilution's okay. An overabundance of it, if there's billions of shares being dumped onto a company and you're trying to see if this is going to move at all, it's going to make it very difficult for a stock to move. And even if it does move, let's say it rises up, dilution just keeps killing it, knocking it right back down where it was. See it time and again. DRUS, go check that out. DRUS, you can go look to see how much that diluted. It diluted like crazy, still diluting. Okay, and that's how it affects the stock. Dilution doesn't allow a stock to sustain gains. Maybe some fancy PR will come out that'll instill a lot of buying, drives the price per share up, but dilution very rarely allows it to sustain at those levels. And so that's why if I'm in a stock that I know is diluting, I'm most likely not going to be in that very long. Maybe I'll make a nice quick little day trade with it, kind of like how I did with COTE last week. It's kind of hard to determine whether or not COTE is still diluting. VMDM, which is a dilutive market maker, is still sitting there. Hasn't been sitting right on top of the ask like it would if it was actually diluting. So I'm not quite sure what their plan is with that and what's going on. But, if it's a stock that I know that's going to be diluting, I'm not going to hang in there forever. I'm going to wait, or I'm going to maybe make a day trade out of it, or maybe like a 2 or maybe 3 day swing trade. Just kind of depends on how the momentum's moving at that point. But I'm not going to stay in something like that for long, just because I know that it's not going to sustain at those levels very long until that dilutive market maker comes in and starts driving the price back down. So once an investor knows that sees a stock struggling or sees a momentum stop due to dilution, they're going to get out. They're going to get frustrated because it's not going to go any higher, or it's not going to sustain past a certain level, and they're just going to be out. And that's how most of us are, and that's basically what I just explained. I'm not going to hang around and just wait for it to get beat back down by dilution. So that's basically what happens. All right. So it says Trump is planning to reduce company filings. I don't know anything about that. I haven't heard that yet. But if that was going to happen, I'm not sure I'm a fan of that. Personally, I don't think I'm a fan, just because we want companies to be as transparent as possible. And if we're taking away from that transparency, then that's going to leave a lot of question marks for you and me as the investor. That's just my quick opinion on it. If what's happening with that is true, and I think I would have to need more information, like what filings are they doing away with? Are they doing away with the need to put out 8Ks? Because I don't think that's very, very good either, because lots of times that's how we determine as to whether or not press release is fake news. If no 8K comes out on that, then we know for a fact that it was fake. Because 8Ks are required to come out within a certain period of time after PR is released. Otherwise, they face suspension or caveat emptors or whatever. So, no, I think filings are no. Oh, quarterly filings? No, definitely. I want to see quarterly filings, especially. Excuse me. As an OTC investor, things are moving so fluidly and so volatile down here that a share structure can change so quickly within a 3-month period. So in my opinion, no, I want those quarterly filings to come out all the time. All the time. Yeah, well, I mean, and so Don Fred says Trump is saying companies are spending a lot just to prepare the documents each quarter and wants to reduce earnings by yearly or annually. Yeah, I don't know if I'm a fan of that. And you know what? Maybe I'll touch on that on a future video. I think that's a good topic that we want to cover. So definitely appreciate that. I don't want to go into that too much until I have all the information, and I will go ahead and cover that for you maybe tomorrow or in a future video later on this week. So with that, guys, if you are watching this video at a later date or if you're just joining me for the first time, I hope that I earned your subscription. And if I did, please go ahead and push that subscribe button and the little alert bell next to it so that you get notified every time I go live so that you can tune in, ask questions away over here whenever your little heart desires. And also smash that like button if you have learned something today about the difference between 10Ks, 10Qs, annual reports, and quarterly reports, and how they pertain to you as the investor. So, with that being said, also click on the links down below in the description. I have lots of stuff going on. We're coming out with their OTC and We Trade HQ apparel very, very soon. I'm so excited for that. Just got off the phone with one of my partners in this, and it's going to be awesome. You guys are going to love it. I know you guys have been waiting in anticipation for a lot of stuff's going on, and super excited to roll that out for you. Other thing is if you are seeing this for the first time, all this information, and you're interested in trading over-the-counter stocks, I do have a course that's out there for you, and that provides you with 90 days free mentorship. And I encourage you to check that out so that you can join me every day, at least for the first 90 days after you take that course, and we can go over the trading day together in the most volatile time of the market. It's absolutely free with the purchase of that course for the first 90 days. And that is all I've got for you guys today. So as always, I will see you all before the bell, and B. Smith is out. Take it easy, team.